going to teach you how to money launder like a billionaire. Here's what the billionaires don't tell you. When you try to buy things like insurance, it's not a deduction for you or your business. What you need is a trust that you're a fiduciary of so you can get what's called a key man policy. Now you're probably thinking, Andrew, why the hell are you talking about all this? The reason is because when I want to money launder, I got to run it through other things. And so what I typically do is I recommend the clients set up an irrevocable trust. The irrevocable trust then creates a net income by owning your businesses. You don't own them anymore. When the money flows from your businesses to the dynasty trust, the trust now has all of this money. And you're probably thinking that's probably taxed at the highest rate. That's true, unless I have a legitimate deduction. And guess what? A key man whole life or IUL policy allows us to have a deduction on the books. Why is this important? Because IULs and whole life have a cash value portion. Meaning, let's say I have $1 million in my trust at the end of the year, and I don't know where to put the $1 million, or I'm going to be taxed at 37.5%. What I can then do is full port every penny of that into an IUL or some sort of cash value life insurance as a key man policy with the trust as the owner and the beneficiary, allowing you to deduct every penny of it on the tax return and virtually make no money on your trust and defer the taxes. What's the best part? You can turn around, collateralize that income, and reuse it next year on other assets. Follow for more tax advice. Comment trust down below if you want to know how to do that for yourself.